Good afternoon, ladies and gentlemen. Welcome to this panel discussion on the launch of the SME Resource Bank for Investment Readiness. My name is Jennifer Baren. I'm the head of partnership here at the Alliance for Green Revolution for Africa, and I will be the moderator for at least the first part of this event. We have a very exciting afternoon today on a topic that is so critical to agribusiness development. There's really a broad agreement that agribusiness SMEs have a critical role to play in agriculture transformation in Africa as the so-called missing middle. However, in order to do so, they often need access to growth capital, technical expertise, skills, partnerships, and a whole range of other services that will empower them to be the drivers of change. At this point in time, there's a gap of $100 billion per annum in terms of SME financing. And we have an excellent panel here today that will discuss challenges as well as opportunities and solutions to address this. Our session today will consist of the following parts. We will have opening remarks first. We will have a panel discussion. You will have the opportunity as well to ask questions. Please post them in the chat box. In between, we also will have a couple of polls. And then, of course, we will close the session with the launch of the Resource Bank. So we have really, as I mentioned already, a whole range of experts. So without further ado, I would like to invite Dr. Agribusiness to actually make some opening remarks. He's the Managing Director of the African Green Revolution Forum, of which AGRA is the Secretariat. BC, Karibu.
Thank you very much, Jennifer, and hello everyone. It's a pleasure to join you today for the launch of this facility. The AGRF, on behalf of the wider AGRF partners, I bring you greetings. We are pleased to see the agribusiness theorem of the AGRF grow and wax stronger from strength to strength. The AGRF, of course, is the world's largest platform, multi-stakeholder platform for inclusive agriculture transformation in Africa. We focus on supporting all partners, public, private sector, civil society organizations, advocacy organizations, to ensure that we can transform the agriculture sector in Africa for inclusive shared prosperity for everyone. Global, in the few time or the little time that I have, I wanted to sort of set the scene of what's going on around the world and what's at stake here. Around the world, the global agriculture and food systems contributes about 10% to global GDP. That's about $8 trillion. Global GDP is roughly around $80 trillion, with, of course, the shrinking of the global economy last year as a result of the pandemic. We've seen some adjustments. However, one big thing or one big feature of the pandemic, or one of the lessons that we've learned, is we need to build resilience to food systems to ensure that the way we produce, process, distribute, transport, and consume food delivers healthy, safe, nutritional outcomes for millions of people, not just in Africa, but around the world. We have seen how the pandemic and the sort of second and third order effects have impacted decisions, not just in the private sector space, but also in the public sector space. And this isn't restricted to Africa. We've seen issues in Europe, North America, South America, East Asia, South Asia, Southeast Asia. So it really is a global issue. Now, Africa as a potential, or the potential for the agri-food sector in Africa to be transformed to ensure that it contributes a healthy percentage of economic growth on the continent is there. I think the value proposition is clear and it's certain. Now, as Jennifer mentioned at the start of her remarks, there is a significant finance deficit in ushering in this reality. We have over $100 billion deficit in ensuring the flow of capital into the agri-food sector on the continent. One of the big things that we want to do through the agribusiness deal room is to reduce the viscosity of finance. Finance is currently highly viscous, it's sticky, it's not flowing in the right directions to the right recipients. And also we're not seeing a proliferation of bankable agribusiness projects and prospects across the continent at scale. So what we're trying to do is not just ensure that we are increasing the flow of capital, but we're improving the investment readiness of the private sector, of entrepreneurs, a sort of a Y Combinator for private entrepreneurs in the agri-food sector, so to speak. And so it is with great pride and great pleasure that I hand the proceedings back to Jennifer to begin this conversation. I believe over the course of today, we will hear from global experts on not just what the challenges are, but where the opportunities are for scaling access to finance, but improving the readiness of entrepreneurs to receive what we hope will be a new wave of financing in the agri-food sector. Thank you very much. Jennifer?
Fantastic. Thank you so much for those opening remarks, the VC. And you're absolutely right. It's a tremendous opportunity that is awaiting us. And I'm very happy to actually share the stage with the virtual stage, that is, with some of the SMEs who really are at the forefront of making some of those changes happen. So I would like to introduce three of our panelists to you first, because these are the SME companies that are joining us this evening. Elorm Alafi is the co-founder and CEO of SciCont. We have Bukenya Godfrey, General Manager, Mujasi Investments Limited from Uganda. And we are also joined by one of our power SMEs, which is Antinuke Lebile, who's the co-founder and CEO of Cattle Foods Nigeria. So as SMEs who are actually active in this space, I actually have one question to you, and I will start actually with Antinuke first. Antinuke, it would be very interesting to hear from you. What are some of the challenges that you've actually been faced with when seeking growth capital? What is it that you've learned that you would like to share with your peers as a potential solution that could actually help many of them? So please reflect on this question. You have 3 minutes.
Hi. Yeah, my name is Elom, and I'm the co-founder and CEO at SciCont. Yes, so at SciCont, we provide bundled digital solutions for farmers and agribusinesses. And from our experience in the space, we realized that there is actually a need to expand in terms of our customer acquisition and then also our asset base. So we've been operating for the past 10 years, over a decade. So we are among the few African SMEs that's over a decade old. And having been operating in the sector for some years now, we realize that it's time for us to expand our scope of work. Yeah. So our intended fundraising is close to $7 million. And that's obviously a large ticket size for most agribusinesses on the continent. So what we're doing currently in terms of our investment readiness is to leverage on the relevant toolkits that are available. And here I'll thank KPMG for providing us very good resources, especially when it comes to financial modeling, which we are leveraging on to develop our investment readiness strategy. So we believe that within the first half of this year, we'll be able to close our investment deal. What we've also realized in our course of reaching out to potential investors too is that there is some element of risks that and additional scrutiny that comes on stream when African-based and African founders are raising investment, and that sort of additional risk also increases the span of our fundraising process, and we hope to overcome it in due course.
Thank you very much for that outset alarm. It's also interesting to know that actually in the context of a global pandemic that is going on, you are just doing and moving ahead with seeking growth capital. And you sound relatively optimistic in terms of the way ahead. How has your business been impacted in this context of COVID, and has that altered your investment strategy or not?
Okay, yes. So in terms of our operations, we realized there's not been a significant impact on our growth strategy and our operations. But we realized there was a challenge with regard to some of our customer segments. So obviously, if a segment of our customers are affected, it means it's going to affect our revenue inflow. So it means that we still have to rely on external actors like government to stimulate the sector for our farmer customers that form a bulk of our customer base to be well resourced, their challenges addressed, so that we could also expand on our growth strategy. So directly, we are not impacted, but indirectly, we are affected because our customers, a segment of our customers, have been heavily affected by the pandemic.
Okay, thank you very much for that, Ilom. Bukenya Godfrey, I'm going to you next. Or managing Ujasi Investments, who's working with a few hundred smallholder farmers in the horticulture sector. So would you like to share with us actually your journey into seeking growth capital, some of the challenges that you have encountered and how you managed to overcome these?
Yeah, thank you, Jennifer. Okay, I'm Godfrey of Kenya, and I'm from Ujasi Investments. This is a company in Uganda, and we are in the agribusiness. And for the last 5 or 6 months, we've been trying to get funding so that we should be able to increase our capacity to purchase from our clients who are mainly smallholder farmers. But you have faced quite a number of challenges in working with these investors, because first of all, we didn't know exactly how to begin. For example, we are lacking understanding of the whole investment criteria, and we lacked a lot of information on how to give out good financial models, how to give out to investment teasers. All that really affected us. And we have not been able to conclude any deal as of yet, but we have been trying to learn as we engage most of these investors to know what they want and to know how we can go about and then secure the required funding. And we are glad that this resource bank is coming on so that we can be easily get to know what we want if we are to approach any investor.
Okay, thank you very much for that, Bukenya. Have you engaged in specific programs or capacity building efforts or reached out to business development service providers to better support you in this process? And if so, can you maybe share a bit about your experience in that field?
Yes, we have engaged a number of business service providers so that we should be able to get more professionals and to get good documents. For example, we approached the SME capital in South Africa, and we also approached EMFC loans in Ireland, and we have been able to help us in developing some of these important documents, which we are going to submit to our would-be investors.
Mm-hmm. Okay, thank you, Bukenya. I would like to go to Antinuke Debile with us from Nigeria. I know you have some connectivity issues. Can you hear us and can you contribute? Would you like to share your experience with us as well?
Oh, okay. Good afternoon, everyone.
Good afternoon. Please go ahead, Antinuke.
Okay, so my name is Atinuke. I apologize, my video is not coming up. Okay, so our company is Cattle Foods. So Cattle Food is in the processing of biofortified crops into value-added products to address malnutrition and aiding hunger through all ages. So one of the challenges that we have in assessing investors is most investors are not willing to take the risk on majority agribusiness SMEs, because looking at the fact that most of investment in agribusiness is actually long term, it is not just a short term thing. So, and most of investors have, sometimes majority of them in Nigeria, always want something quick that can give them back their money. And also, most investors required high turnover. And looking at the fact that in the business where your profit is just 30% or your profit is just 35%, and an investor is requesting for about 15, 18%, then it's really a challenge. So I think it's not just pertaining to us alone. I think to all SMEs, SMEs don't have this so much money as turnover to return, and also collateral that most of these investors are asking for are something that sometimes we might not be able to meet up with those things. Yeah, thank you.
Thank you, Antonika. So those are actually quite some challenges that actually really indicate a mismatch that often is between the capital that's being supplied to the market and what it is that SMEs are looking for. What are some of the efforts that you have taken more specifically to overcome that? Whether you have been successful or not, but what are some of the upcoming capacity building initiatives or efforts that you have taken out to service providers to basically strengthen your investment readiness?
Okay, so what I always tell, not just myself or not just my team, every other person, is being investment readiness is something that is actually very important, because an idea without money is frustration. So it is very important that we get ourselves ready, and also most time, like what you want to do, we should also realize that investment is not just about the money, it's about training, it's about mentoring, it's about networking. So it's not just money all the time. It might be people that we need. It's something that has happened to me personally, looking from experience. I have met people that has helped our business grow. They've talked to people about our business. We've won contracts through these people. And so it's not just about the money, it's about training also. It's about hand-holding. It's about mentoring. Yes, and I think this is a very good initiative that you are taking to actually get SMEs like us ready.
So investment is definitely not just about money, Antonika. It's also about experience, connectivity to the market, and other growth opportunities. I think that's actually well said. Thank you for your contribution and sharing some of your challenges. We'll come back to you later. I would like to actually turn to our panel of experts and those practitioners that we have. We have Jay Kusek, who's a partner in Cross Boundary and a co-founder as well. We have Elizabeth Ramai, an investment associate at Exio Capital. Rita Odero, investment executive at Growthin in Kenya. And also Lucy Pushka, the East Africa Hub Manager for Water and Energy for Food of GIZ. So you will also see in between that the polls are actually coming through, being managed by our ITP manager. Please respond to them and we will give you the outcomes of the polls at the end of our engagement. So turning to our expert panel, I would like to actually start with Jake. Jake, in your 3 minutes reflection, Jake is managing partner also has been the implementing partner of Agra and the direct partners in implementing the Agribusiness Deal Room, which is a matchmaking platform for SMEs and also government investment opportunities at the Green Revolution Forum. Jake, would you like to share with us some of the experience in terms of bottlenecks and challenges that SMEs have experienced within the deal room, and what are some of the efforts that have been taken to overcome them?
Sure. Thanks. And can you hear me okay? My screen, I lost my video with the pull up. Okay, cool. Well, thanks very much for having me. And yeah, I think, Dr. Araba's comments at the beginning really resonated with me. I think one of the challenges is that the deficit, the need is $100 billion, but the sort of transaction size of that need is typically in the $1 to $2 million range. And so you have a bunch of very small transactions that can be challenging for investors who are often managing larger pools of capital to find and then finance. And I like that phrase, sort of the viscosity finance, that it is sticky. It kind of tends to go to where there's already investment interest or where investors have already gone. And I think a big part of the role of AGRA and the partners of AGRA is helping surface those opportunities that are there and bring them to the attention of investors that might otherwise just go where they've gone before. I think one of the challenges in financing these type of deals is the high transaction costs. So there's high transaction costs both from the investor side and from the SME side in terms of the bandwidth that's required to go out and look for capital, to understand the different sources of capital, the expertise that's required to negotiate and prepare materials to access that capital. And so there's kind of, I think, a couple different ways to tackle that. One, of course, is the launch of the resource bank, which is really about compiling those resources that can be sort of shared and benefited from by a number of these investors and companies that have the same need. Another is things like the deal room, which basically save on those search costs by curating for investors or curating for enterprises the most relevant matches, so that, as was just talked about in the SME section, SMEs aren't going around having a bunch of conversations with investors that don't have capital that is the right time horizon or the right interest rate or the right terms to fit their needs. And then I think there is, the resource bank is just the beginning. There's that need for continued hand-holding and support to these enterprises and investors until the transaction closes and even beyond. And that's something that I know AGRA does, that USAID does, that things like the Prosper Africa initiative seek to do. I think one piece of advice for SMEs is, to not, finance can seem a bit mysterious from the outside. And I remember when I first started working in private equity over a decade ago, I was sort of intimidated by a lot of the jargon, but it's just that, it's just jargon. And don't be afraid to ask the question of, if an investor asks for your cap table, it's okay to ask, what is a cap table? What are you looking for when you ask for that? Because I think, sometimes there can be an exchange of business cards or an exchange of contact details in a virtual form such as this. And then investors follow up with a set of questions and the enterprises are not quite sure how to answer them, but rather than, risk sort of the embarrassment of not knowing, they just sort of let the conversation die. So I really encourage SMEs to, not be afraid or intimidated by investors or the jargon, but continue to drive that conversation forward, because investors are looking for good opportunities. And there's a number of investors that are seeking agriculture investments in Africa. I think I see Exio Capital on the panel as well. We've worked with them in supporting investments in this space. For example, a deal in Tanzania into a packaging company that is reducing post-harvest loss, and that deal was made possible by the support in part of USAID that allowed transaction services that might not otherwise have been possible for a relatively small transaction. So yeah, I think just in summary, and really speaking to the enterprises that are the audience, know that this is an area of great interest for donors, development finance institutions, and investors, and there's a lot of resources out there, and the resource bank is just the beginning. Thanks, Jennifer.
Fantastic. Thank you very much for that contribution, Jake. I think really a couple of very interesting points and lessons that the SMEs in our audience can actually take at heart and move forward with. It's actually interesting that you're referring to Exio Capital, so I would really like to go next into Elizabeth Romay. So Elizabeth, as an investment professional at Exio Capital, and to share your reflections on SME readiness, the changes that you've seen, and maybe some of the advice and the tips that you also might have.
Thank you, Jennifer. It's a pleasure to be here and to participate in this conversation, which I think is very important and very critical because as an investor, we see a lot of deals that come across our tables that where unfortunately majority of the SMEs are what we would call not investor ready. And it becomes a bit frustrating for us given the wide pipeline of investments that we look at and our quick screening processes. It usually is unfortunate when a potentially great opportunity falls through the cracks just because of the challenges of not being ready. And some of these challenges that we've come across are just unavailability of information, so critical financial information like your audited financials, your business plan, your financial projections. Such things are very important to us as investors to be able to assess the credibility of the business, the growth potential of the business. And so seeing some of these challenges with the SMEs is very frustrating sometimes. And so I am actually very excited about the launch of this resource bank that will really enable a lot of the SMEs to get the support that they require to be ready to come and sit across the table from me as an investor, and for us to be able to have a good conversation and to be able to tackle what we need to tackle, because it usually actually is very frustrating when you don't get what you need from the SME. Jake has mentioned that we've worked together with Cross Boundary before, and such initiatives have actually been so beneficial because they've not only benefited us as the investor, but also the SMEs by allowing, in the case of this company, for us to gain a better understanding of the sector, for the SME to get a better understanding of the sector in which they operate in. Instances where we've also worked with other intermediaries have been where we've encouraged the SME to get an auditor in place, and we've actually proposed names and gotten a financial review done. And that's enabled us to better understand the business, and also has put that SME in a better position to defend themselves, or defend their numbers, and to explain what their investment need has been. So I really applaud the initiatives that different intermediaries take to support SMEs. I see a need, a really critical need, and that by getting the support that they need and the investment support that they need, it gives the SME a better chance and a fighting chance to be successful in their funding raise, and to sit across investors who are actually able to partner with them and meet their funding needs. So I really applaud the launch of this resource bank, and we've benefited from other initiatives such as the deal room that Agra has. We've participated in it in 2019 and 2020, and it's benefited us in the sense that it gave us visibility about companies that we didn't know about, and it also gave the SMEs visibility to us, because a lot of SMEs also don't know about certain private equity investors as well as other funding sources. So I have seen the benefits of the deal room, and I believe I will see the benefits of this resource bank. Thank you, Jennifer. I'm sorry, Jennifer, if you're speaking, I'm not able to hear you.
Thank you for that, Elizabeth. Sorry, my button wasn't muted. So thank you for those remarks. I can really see a couple of red threads coming out there, also in terms of what Jake was mentioning, in terms of the hand-holding throughout the process that is required, the capacity building of SME, make sure that not only documentation, but the understanding of the process is there. But also the whole visibility of the pipeline and the opportunities that are out there, and even hand-holding the connectivity and making sure that we work almost as an ecosystem towards deal closure and transactions. So that is quite interesting. And what I also like is the passion, if I can call it the frustration, that probably translates into passion that we heard both from Antonia as well, in terms of the need for capital and what is required from the SME side, but also what you are expressing, that you are so keen to actually have a pipeline of high value transactions or potential transactions that you can explore. So we're very happy to contribute to that. And I would like to therefore go to Rita Odero from Growth Kenya. And Growth, who is a company that is specialized in funding and operating across the country. And I think it's interesting to hear your viewpoint as well, because you're also focusing on that investment nascent companies. Share with us, Rita, what you experience in terms of the challenges that the SMEs facing, but also some of the potential solutions, and probably also some of the trends and some of the latest innovative developments that are helping this space to move forward. Rita, over to you.
Well, thank you, Jennifer. I think, like my colleagues have said, I'm also glad to be in this conversation. I think overall it helps us to understand what different businesses are also looking at, but it also gives the businesses an opportunity to understand what investors do look out for. So basically, it really helps close the gap. So Gropin, as an organization, our key role is really to support SMEs across different sectors to access growth capital. Our real intention is also to increase the ability of these businesses to succeed, to address several key causes of failure, including access to finance, but also our key value proposition is business support. I think Elizabeth has touched on, some of the areas that seem to be a challenge for SMEs. While entrepreneurs are highly qualified professionals, sometimes we see some gaps in business planning and, cash flow management skills. And the challenges could be numerous to poor infrastructure within, their systems and processes. And to sometimes limited access to technology, but also market linkages. And so as an organization, one of our key value proposition is that we provide both pre-investment, but also post-investment support. So the point when we begin to deal with these entrepreneurs, our key aim is to try as much as possible to understand the business in its entirety. So we look at all aspects of the business, from governance in terms of the entrepreneur and their team, to the business model itself, to understand their key clients, their suppliers, various stakeholders that they do work with. We also do look at their cash flows, basically to look through, the key financial indicators to provide as much support as possible, but also to enable us to structure the right product, provide the required capital to meet the needs of the business. We also are keen on assessing the operational aspects of the business, and obviously this would be to enhance efficiencies at different levels of these businesses that then we work with. So at pre-finance, I would summarize it as we do a business diagnostic that supports the business planning. And then post-finance, we also look at business formalization, but also growth in some of the key risks that we identify at the onset. So a thorough evaluation around what would help the businesses to also be due diligence prepared, because a lot of businesses and entrepreneurs sometimes fail to understand what is it that an investor is really looking at. And what key areas would I need to be able to address in order to allow the investor to understand the business in its entirety. And so I think, like I've just summarized it, it goes beyond just the need for funding. So other than just looking at the financial need of the business, we are keen to understand the entrepreneur and his team. We would be keen to look at the business model, the clientele profile, the market, the suppliers, and then obviously the cash flow and finance to understand how the investment that we do put in the business will have an impact on the future cash flow of the business. And then obviously we also do look at some of the environmental, social standards, especially for businesses that are handling food in agro-processing. So again, a key area that we do look at to support some of these businesses. So thank you. I think that's what I would have to say on that area.
Fantastic, Rita. Thank you very much for your contribution. I'm happy to hear about all the investments that you're doing before our transaction and even after the closure of the deal, just to understand that you have sufficient insight into the business and some of the tips that you also have for our SMEs in terms of how they can prepare for this process. I'm looking at some of our SME panelists, and I would like to actually quickly, before I'm going to our last panelist, go back to you. As to what extent you actually recognize some of the advices that have been given, and have you seen any specific trends or changes in how you have approached or how you will be approaching your investment strategy? Anybody? I think Elorm, I'll start with you, and then I will go to Antonica.
Yes, okay, so when it comes to investment strategy, what we've realized was that a lot of the investors that participated in the deal room in 2019, 2020, what we realized was that they were a little bit not so familiar with the agri-SME landscape. So they came with a very a different approach to the kind of investment that they would like to go in and the kind of requirements. Now, they were looking for more than $1 million turnover kind of deals. And most agri-SMEs are operating below the $1 million turnover, right, annually. And most of the investors that were actually requiring more than that. And the ticket sizes, the ones that we interacted with, what we realized was that we were not ready to write very large ticket sizes for African-based SMEs. So in this case, it means that we have to go back and reach our asset and a resource base and then come back again, because our initial fundraising strategy was to raise about $3 million. But I realized was that it was too low as a ticket size for most of the SMEs. So we have to increase it and then enrich our resource base, expand our audits also to make sure all our books are in order. So with some of the resources that we also got from KPMG, especially when it comes to financial modeling, it's a very good guidance material that we are leveraging on to approach our investors again. And also we've also expanded our assets that we realize the investors were actually looking out for, and we believe that it should work. And the same applies to other SMEs that are comparable to us. You need to have a very strong asset base and very strong financials. Other than that, no investor will pump money into your operations, which is more than $1 million. Because most of them want to write large ticket size, but you have to, as an SME, you need to have the requirements in place.
Thank you for that, Elorm. Antonica, I just wanted to have maybe your quick feedback, and then I'm going to Kenya.
Okay, thank you very much. Just like my colleague has said, we really need to get ready. That is just the key word. And getting ready is looking at the pool that I've been passing out. I can really say that a lot of things that we need to get ready, like getting our books ready, is actually very important to all SMEs, because that's one of the major reasons why most of SMEs don't get investment at the end of the day. We don't have audited accounts. We don't have this accounting. Our books are not complete. Yeah, so it is actually very important when we have to put those things together. And also, it is also very important for us to understand the type of investment that we're getting and the investment that is coming our way. Just like Elorm said, like a lot of investments came in millions in dollars and all that we are not even ready for. So before you even go for any investment, before you go to any investors, you need to understand what they're looking for. You need to understand the money they're putting out. And one of the things that we SMEs don't really understand is that not every money that comes our way is actually meant for you. Don't just believe every investor has to invest in your business. Yeah, so we need to understand the type of investment that we are looking for. We need to understand that. So I just feel with that, if you understand every investment you need, what the investor is looking for, the money they are bringing out, and don't just look at the hugeness of the money, like this money is big. What if you don't need that amount of money at that particular time? you might need something lesser than that.
Yeah.
And by the time you are getting so much money, you might actually misuse it at the end of the day. So we need to understand what we actually want.
Very good, Antoniki.
Thank you very much
for that. I think that's critical. Although I do see, you know, the ongoing discussion also on the gap between the capital available and the pipeline of investment opportunities, how it looks like. But Kenya, I would like to go to you first before going back to our panel of experts. Would you like to reflect on some of the advice that has come forward so far? Kenya? Godfrey, can you hear me? I think we've lost Godfrey. So I think it's actually interesting. And I think Lucy, I'll be going to you first before actually coming back to Jake on some of these things that we've heard. But Lucy, I left you not deliberately till last, well, maybe partly deliberately, because I think there's also another interesting aspect to the entire investment landscape that we haven't discussed yet. There has been a significant momentum that has been built around investment opportunities that are linked to investment and resilience, sustainable management of natural resources. And investment readiness also means understanding the investment landscape for some of the opportunities, how we can integrate sustainability actually in the investment opportunities that our SMEs are presenting. I would like you to actually maybe reflect on that in terms of the opportunities, the trends that you see, and what your advice and tips would be to our SME community to strengthen their investment readiness.
Sorry, you cut off a little bit. This was addressed to me.
Yes, Lucy.
Yes, okay, sorry.
Did you manage to catch the question?
Yes.
Yes, you did? Okay.
Yeah, I just didn't catch my own name. Apologies. Yes, so in fact, I'm working for an initiative called Water and Energy for Food. And here we have that specific angle of resource efficiency and climate resilient building solutions. So that's our particular let's say technical or sectoral focus, but in essence the underlying philosophy is that the private sector is essential for any sort of catalytic change within the agricultural sector, and therefore we work with the private sector. And what we do is, well, there's different ways, there's different kinds of partnerships we can form with the private sector, but we also do innovation calls. And what you get if you get awarded during the innovation call is sort of we're going together on a journey for 1 to 3 years where you get financial assistance. Those are generally ticket sizes between 50,000 to 500,000 US dollar, as well as technical assistance. And what we realized over the years is exactly that it doesn't have to be much money, especially if we're sort of at the lower end of the missing middle. But what we often need to do is we work with SMEs to build the foundation of their own business. So even though we want to tackle greater water efficiency in agri-food processing, for example, what we still need to go at is at the very core business development elements, and this is building a stronger HR system where you can acquire the talent you need and then retain it. It's about what we've heard before, building your sound financial management system so that if you are asked to show your books, you can. And so to some extent, the work that we do is, of course, we want to aim for these higher goals of improved natural resources management and climate change, but it does come back to business development. And the other thing that we're realizing is that a lot of these challenges are interconnected. So we might have a pump manufacturer who's building solar-powered irrigation pumps, and that's innovative and touching on a lot of things. But at the same time, that pump manufacturer is dealing with distribution issues, dealing with issues of access to finance for their own users, for smallholder farmers. These smallholder farmers are then dealing with climate change issues, with risks that then somehow are linked to what the pump manufacturer is dealing with, which is I mean, in this case, he has a business case for offering an irrigation solution to adapt to climate change. But at the same time, a lot of the repayments, for example, for such a pump depend on the income of the farmer. And so it's interesting because what we're doing is we're looking at sort of the entire ecosystem. And we realize the supplier is not just a supplier, but there is a lot of other things that come in with it, where if we want to support that SME, we can also do trainings for farmers. We can also work with financial institutions for financing solutions for farmers, etc. And this makes it quite a very diverse area of work.
Thank you very much, Lucy, for outlining all of this. We actually are at 15 minutes to the hour, and I would like to actually go to the audience because there are questions piling in, and you might be excited to know quite a number of investment opportunities are being shared for the different panelists to look at. So you can have a look at it, but I would just like to pick out a couple of questions that actually also align to some of the questions that were emerging in the conversation that we're having anyway. So going back to Jake, we've heard from the SMEs, we've also heard from investors, etc. And one of the points that came forward is just a mismatch, that a lot of the SMEs, their ticket size is actually significantly smaller than what would be viable for some of our potential investors out there, but even when it comes to access to loans, etc. So can I have your reflection on that, in a sense, like how can we overcome some of these challenges, and especially how have you worked also in the deal room to address that? Thank you.
Sure. Yeah. Look, I mean, I think the reality is that it is challenging. It is hard work, particularly at the early stages. There's less investors out there for the early stages, and so at the very beginning, it's usually some combination of friends and family, local bank debt, personal savings, and then looking for specific programs that will write these sort of smaller check sizes, whether it's as an investment or grant or some sort of blended finance, programs like water energy for food. And so I think, and these programs are, there's new programs starting all the time. They have different criteria, and so you kind of have to stay continually plugged in. Like if I'm an enterprise, I'd recommend following on Twitter, Agra, following Prosper Africa, following GIZ, following all these different things, because there's basically different windows of different types of funding that is aligned with certain donor priorities, and you want to be aware of those because there could be something that's just the right fit for that $75,000 check that you need to get started. But unfortunately, outside of events like the forum, the deal room, where you have that sort of moment in time where we put a lot of effort into curating investor profiles that then got sent out to all the SMEs that were participating in the deal room, and then linking those SMEs up with specific investors for matchmaking. So take advantage of events like that, but throughout the rest of the year, really try and stay plugged into forums like this, listening and hearing, oh, there's a new program that's been announced that's focused on solar irrigation, and that's my interest, and therefore I can take advantage of some potential grant financing. And then as you get farther up the chain, there's larger institutions that have sort of more constant capital availability. It's not sort of windows, it's just that they're always open for business. If it's the DFC, for instance, once you're above the $5 million capital need, the DFC could be a very logical first port of call to look for financing. There's a number of private equity funds or debt funds, Exio Capital, AgDevCo, et cetera, that once you get a bit bigger would make a lot of sense. Hopefully that's helpful.
Fantastic, thank you so much, Jake. I'd like to also go to Rita and Elizabeth and ask what are some of the trends or the changes that you see especially in the context of the pandemic? And what are your expectations actually going forward in terms of investment strategies, not only from your end, but also the trends that you've seen in terms of the SMEs that you're monitoring and the opportunities you're exploring? Perhaps I start with Elizabeth first.
Okay, so from our end, some of the challenges that we saw that came about from the pandemic, one was the support that some of our portfolio companies needed. So there was focus from our end on helping our portfolio companies. So we doubled down on some of the follow-on investments just to support them and to tide them through the impact and the effects of the pandemic. One of the other trends that we also identified, or a challenge that we identified rather, was our ability to network and our ability to travel due to the restrictions that were there. A lot of our deal sourcing is done through travel, and some of the travel, obviously the travel restrictions made that a bit difficult. So we saw a decline in the number of pipeline deals that we were identifying. And so one of the things that we decided and we benefited from actually was the deal room, for example, that allowed us to have visibility of companies that were not able to physically access, or some of the conversations that we had not been able to have. We were able to have visibility from initiatives and programs such as the deal room. Going forward, some of the things that we are doing as Exeo is, one, we really take an active approach towards value creation, and we look for businesses where we can be hands-on and add value. And so our deal sourcing initiatives are more now focused on such opportunities where we just don't bring the money. Also,
the availability metrics.
Sorry?
Apologies. Go ahead, Elizabeth.
Yes, so where we add value where necessary. What we are also doing is that we're making a lot of use of what we're calling operational associates, as well as intermediaries, who help us, one, in understanding some of the sectors that we are not able to fully grasp. We as an investor focus on food and agri, but we do know that food and agri is really wide, and you don't have knowledge in all of the subsectors in food and agri. So we are really using operational associates to offer support, technical support where we require it, and as well as working with intermediaries as well. We are also relying a lot on some of our investors. So this would be our DFIs and NOFANs, the bio investment groups, who are able to offer technical assistance to our investee companies that require assistance for certain technical aspects of their business. So that has also been very helpful, and we have also noted that in some of the investments where we are not able to invest as Exeo, where we interact with SMEs, where as Exeo we are not able to invest, we can direct them to some of our partners, the NOFANs, the bios, and also direct them to their technical assistant facilities that enable them to become investor ready. And so these are some of the initiatives that we are putting in place. We're also exploring alternative investment structures outside of just the pure equity investments that we make. And this has enabled us to look at what we'd consider more riskier or early stage investments, where we are able to create a blended investment structure, be it mezzanine financing or a convertible instrument that allows us to participate in investing in the SME and meeting their need, but also covering ourselves from the potential risk, because the reality is we need to protect our investment, we need to make a return. And so one of the things that we're doing is that allows us to look at a wider pool of investments and consider a wider pool of SMEs is just exploring alternative investment structures that allow us to still invest and have where both the SME and ourselves benefit. So these are some of the trends that we're seeing or some of the structures we're implementing ourselves, but there are also trends that we're seeing with other private equity funds, particularly within the African landscape.
Fantastic. Thank you very much for this contribution, Elizabeth. Rita, I would like to direct actually the same question.
Yeah.
In terms of
thank you, Jennifer. I think.
Go ahead.
Sorry, I didn't get that.
I was saying there's just a bit of disturbance on the line, but please go ahead.
Okay. I think just to add on to what Elizabeth has said is, I think our approach during the pandemic was first and foremost to continue our engagement with our portfolio clients. We were quick to assess the risks that pertain to individual clients and their unique business setup. So what we did in-house and internally was to place control measures, with them alongside their structures and processes, just to ensure that most of them were complying with the Ministry of Health government guidelines. And then the next thing we did see, because of the disruptions that did take place, were cash flow challenges facing a number of them. And so we did develop a cash flow resilience modeling tool. We had our investment, managers taking on sessions with individual clients just to take them through what are the key tips that they should, take into place and consider at this juncture in terms of, the cash, the credit, and communication with the various stakeholders. So, discussing, possible solutions with some of their suppliers, or even negotiating for terms with some of their customers to see what they could actually sell on cash for those who were still operating. I think also internally, we did see a lot of requests coming through from the clients who are looking at bridging finance considerations in terms of just working capital to sustain their operations and also to support the livelihoods that a number of these businesses do create in terms of jobs. We did a lot of concessions for businesses that were not able to meet their obligations pre-COVID. And so we did customize by providing some grace period to support businesses to deal with the impact. And so this also really called for a change in the way a lot of these businesses were conducting business. And so what we did, we do have an in-house training for online social media marketing, because we saw that a lot of businesses were able to progress by going online. So we did create and hold a training session for a lot of these clients to move towards online social media marketing, review individual websites, and just made certain recommendations around what they needed to do differently. Basically, to approach the market in terms of their product and service delivery. A lot of them have had to adopt to online strategies. I think going forward, we are also now continuing to work with them very closely on identifying certain working capital areas to improve on their working capital needs. We did also approach some of our investors to see how we could extend grant funding to some of our portfolio clients to support them continue with operations and to sustain the jobs that they already have created. And so I think as we see it now, a lot of them are scaling back gradually. Some of the concessions have come to an end. We see some of the entrepreneurs are now able to pay a significant amount of their installment, if not fully. I think some of the schools that we have in our portfolio that were hardest hit are also now back in operation. We did notice a drop in the student numbers for some of the schools because parents did lose maybe some sort of income and probably transferred their children to different locations of setups. And so with some of these clients, we are still assessing the kind of concessions we can consider going forward. But our model allows for that continuous engagement to be able to provide a unique and customized support to individual clients depending on how they were affected. We're also able to witness that not all the businesses were adversely affected. And so some of our portfolio clients, especially in the manufacturing sector, because that's still an area that we are in terms of agri, could be, food processing, did relatively well and were able to sustain, their obligations throughout, and actually grow their top line. And so different clients have different needs. The model really looks to customize, the business support that we provide based on the sector, based on the client profile. And so a few lessons learned, good lessons for both investors and entrepreneurs that I believe we're taking in stride as we go along. Thank you.
Thank you very much, Rita. That's really literally a lot that is happening. And I think it's also very insightful to basically see how different measures are being taken and how your finger on the pulse in terms of what are the trends in the market and what is actually happening. Unfortunately, we are almost running out of time as I have to hand over to the next moderator for the launch of the resource bank. But I think we've had a very interesting and fruitful discussion and a lot of insights also from our experts. I would like to just share with the audience, yes, we will share some of the contact details with you of some of our panelists, especially Lucy, there's specific questions coming towards you. With regards to the resource bank, in our next session, we will explain a lot more about what a resource bank is, but just in short, it's a repository of all kinds of guidelines, tools, and also research for SMEs that will help them to prepare better, from specific Excel sheets to pitch presentations, etc., and case studies in terms of how you can just beef up both your insight and know-how into the investment landscape, as well as prepare better for investment pitches. So yes, that information will be available and we'll share it over the chat with everybody and also in the coming days on social media on how to access this on the Agribusiness Deal Room website of the HRF. I would also like to just give you some insight in some of the polls that are actually closed. We asked our participants in terms of if you were invited to a pitch session tomorrow, would you actually be very confident that you have all the information, know exactly what you should be asking for, and also have your documentation ready? 26% of our audience is actually extremely confident. So I think that's probably a turn in the landscape for the better. 61% is somewhat confident, but 17% actually has no idea what needs to be done. So I still think there is some work out there for us in terms of that. I'll be sharing some of the other answers to our poll with you later today. But I would also like to share that in terms of all of the activities that we're doing here at AGRA, the Resource Bank is just one of the guiding tools. On the 4th of March, we will have a session that will specifically focus also on bankability metrics. That is really for more access to loans and how you can do how we can standardize basically the assessment of companies, SMEs, actually before they actually start engaging with financial institutions. And the whole aim is also to how do we literally pump more insight and knowledge into the landscape to ensure that our SMEs are having better access to finance. So we'll also share further information with you on that. However, I would like to say that for me, this was a very insightful conversation. We need to take a lot from it. I think there are really two key items that resonate with me. One, it's never only about the money. It's also about just the opportunities that are being created, the connectivity, and the expertise that you're getting on board. Number two was really the hand-holding that is required, and almost the whole ecosystem rallying to make sure that from beginning to end, actually, we support our SMEs in accessing finance and closing deals appropriately. And I think my third takeaway is really that there's already a lot happening, but it was very helpful to align and create a lot more visibility and insight into that. So on that, I would like to thank all of my panelists for their contributions, and also the audience. Don't leave yet, because we still have a couple of very interesting speakers who will be sharing with you some insight and advice. And of course, we have the launch of the bank itself. So on that note, I would like to introduce our next speakers who will be coming. We will have Vanessa Adams, who's the Vice President for the Strategic Partnership Division here at Agra. We have Jo Couture, who's the Senior Investment Officer at the IFC. And Patrick Smith is the Chief for Market Systems and Finance Divisions from the Center for Agriculture-Led Growth, the Bureau for Resilience and Food Security at USAID. Thank you so much, panelists. And Vanessa, I'm handing it over to you.
Thank you so much, Jennifer. What a very interesting conversation. We've had over 250 people joining the conversation already. And as Jennifer described so well, hopefully you've been tracking the numerous resources which all of you have brought to this conversation. So we're very, very excited. Since Patrick, I think, is online, maybe he can join by video. And let me start with you, Yosuke, and ask you, I mean, so many people dream of IFC investing in their firms. Can you just give us a bit of an idea, an overview from an IFC perspective of the resources and tools available for SMEs, and also of, you know, how things have changed regarding the outlook for food and agricultural investments over time? Because of course, relative to so many other investment areas, this is always a challenge. One of the audience even asked, you know, why country risk is such a barrier. And I know this is something that you spent a lot of time looking at within IFC. So let me turn it over to you, and then we'll come to you, Patrick, after. Thanks, Yosuke, over to you.
Okay, thank you so much, Vanessa. It's a pleasure to be here. So, right. So what we are seeing in agri sector trends. So actually, you know, we have about a $500 million portfolio, about 50 clients throughout the continent. But actually, so it's really encouraging that this platform will be launched, because I think we think we have to start supporting more emerging type of the companies. And then since start of COVID, I mean, what we have seen is we can no longer rely on global supply chain, right? So more and more local production or regional trade is important. So we want to see more and more next generation leader to come up from Africa, and then we're trying to, you know, see how we can support. And then we have a various tool, right? And then actually, Atinuke, I think she mentioned that, you know, she looks for capital just beyond just money, more knowledge and hand-holding. So we do have that, because if we assess you know, various agri investment, common success factors are really raw material access, like a trust with local farmers or supply chain, you know, capacity building, and then also really the cost competitiveness, right? If I mean, usually food items you could compete with a Brazilian chicken or Ukraine wheat or cheapest, you know, thing from everywhere in the world. So you have to be cost competitive vis-a-vis your import parity price. So those things. So we do have advisory services colleagues in addition to investment person like me who can provide surrounding farmers capacity building, operational improvement, and all that. So we're trying to be like that. And then really just one thing I really want to mention about this Agra platform is really, so you know, I mean, early stage company investment has been really challenging, and actually some of the entrepreneur guests had expressed, you know, frustration, and I totally hear that. But it's really good start, right? Because now investors like us or other, you know, funds can now have a bigger pool to, you know, see, right? So probably it might be hard to select 1 out of 10 pots, but if we have like thousands of companies, we have more confidence. Okay, we are selecting really best of the best. So it will be good for investors, and also for the companies. I mean, you know, I think they should also select financiers, right? And then so if we can bring capital beyond money, and I understand the database would include profile of various investors and what they can offer. And also one thing we can tap through this platform is like a diaspora, right? And I think as Jack mentioned in his talk, I think like early stage companies, it's hard to, probably one might have to start from family fund or some friends or those people. But there are many like African diasporas in various parts of the world, and just like a Kiva, right? I mean, if this can connect like online platform connecting African SMEs and then diasporas who want to support, then I mean, maybe nothing will stop us for African SME to kind of do private equity offering using Agra platform to diaspora, right? So, and lastly, I mean, I really think like a sky is the limit on this database, because we can really accumulate like using machine learning and all those tools, like a kind of common lessons learned or success factors. And what I really dream is like, I'm Japanese, but if I go back to Japan and then go to like a consumer, apply for consumer loan, if I punch in like my profile, age and education, certain things, machine learning will analyze my profile and then match with common recurring success factor or repayment factors, put my score, and then I can lend up to, I don't know, a couple of $1,000, a couple $100 they will decide. So those like, if database can connect with such machine learning, I mean, I think the transaction cost to finance SME will start to go down. I mean, I know it's not, it's probably 10-year exercise, but that's what I think we should all dream and aspire. So really, thank you very much for launching this platform and inviting us. Thank you.
Thank you so much. And thank you for giving us a futuristic view of the cost-effective machine learning digitized investment vision. That's really fantastic. And I'm going to start working on that right now. But in the meantime, Patrick, I think, spends days and nights thinking about how many different types of blended finance and, you know, matching grants and every kind of technical assistance that the U.S. Agency for International Development has invested in over the years. So Patrick, give us some insights. What's working, and how do you see, you know, we have participants from all over Africa that have joined, from Nigeria, Malawi, Cote d'Ivoire, Ethiopia, Kenya, Rwanda. There's really a hugely diverse audience online. And so what can you share in terms of resources, insights, and recommendations, and maybe your own 10-year vision, since Yosuko has thrown the gauntlet?
Thanks very much. I'll provide some general thoughts, and we can dive in as people are interested. I just want to thank everyone for this opportunity to contribute to this discussion. And in particular, I really appreciate the insights from the private sector panel. And as Jennifer highlighted, their passion for this subject, their commitment, that's really exciting to see, and it's really important. And at USAID, we really value the voices of the private sector, especially the local private sector. And we hope that this forum and others sponsored by our partners will lift those perspectives to the level of policymakers and policy influencers. And I'm also really particularly pleased to be here because USAID contributed materials to this resource bank. They were developed based on a long history of experience and learning about SME-led agricultural development. And I hope that as people use these tools, they'll continue to provide feedback so we can make them even stronger. As we think about finance for SMEs, there are two components: the supply of that finance and the uptake and use of that finance. And as you've heard from the panel, these are tied together. It is only when an SME has in place sufficient financial and management capacity, along with a strong business plan, that a financer will be willing to take the risk of investing in them. And I also want to highlight that USAID is particularly concerned about inclusive finance, especially for women, youth-led enterprises, as well as businesses owned by people who are not among the well-connected classes, those who are systematically excluded. Smaller firms also face particular barriers. They often lack a track record of successful use of external finance. They may have minimal assets for collateral, or they lack a detailed plan for expansion and growth. And then under the US government's Feed the Future initiative, USAID has implemented and continues to implement capacity building programs for SMEs. But these are often in the context of larger market development and value chain programs in many countries. And I think, as we've heard from a number of the panelists previously, small firms not only need individual capacity building, but they also need a supportive network of business services and partnerships with customers and suppliers. So SME success relies on a whole market ecosystem of actors working both in competition, but also in collaboration where they share the same goals. In general, we hope that market systems will move toward greater trust among the parties and the ability to take collective action when needed. We're also quite excited about the Resource Bank because USAID's own field missions in many countries will implement many programs that support SME capacity strengthening. We'll find the Resource Bank to be a rich resource for entrepreneurs to draw on for guidance, templates, examples, how-tos, and related information. So I'll stop there, and I can certainly go into more detail if you want on some of our innovative approaches. Thanks.
Thanks so much. You know, I was just thinking of the expression in the US, time is money, right? And for every entrepreneur I know, there's no available time. You're up at 2 o'clock in the morning, looking, scrambling, what can you find, just-in-time learning. Today, what do I need, right? And everything from packaging equipment to processing to food safety testing equipment to certifications. Some of our audience have been asking about specific support for horticulture, for livestock, for seed companies, you know, so there's so many specializations, and we tend to use these blanket terms, right, trying to cover everything for SMEs or even food and ag as if they're all the same, and we know that's not the case. And what's so wonderful in this community of SMEs is the diversity and the ingenuity and entrepreneurial spirit. And so, you know, sometimes people just need a boost, an entry point, right? And people get exhausted going in circles saying, well, who's my mother? You know, the kid's storybook, right? Are you my mother? Are you my mother? Do you have some financing for me? You can just get worn out going in circles looking for the right solution. So, you know, both of you who have been doing this a long time, and, you know, where do you start? What's your entry point? What do you recommend? Just a quick, you know, example, maybe a case study of a particular country that you're seeing progress in. And then we can wrap up with some of the upcoming events like Jennifer mentioned, and tools which will be made available, because this is the year of food systems. So we're going to see a lot of launches and resources being made available. Hopefully new ways even of measuring transformation, because in the end, this has to all add up to significant growth, right? Coming out of COVID, you know, people have dire predictions for 2-3 years of recovery time, you know, 10 years of nutritional backsliding. I mean, there's some really dire predictions which can discourage people, but I'm still an optimist, and I'm wondering, maybe starting with you, Yusuke, how do you see this?
Okay, so right, how entrepreneur could start and grow, right? So actually, so probably realistically it's hard. So probably it has to start with like a saving, right? So what I'm really personally watching is like Save As You Go system. I think I forgot the name of the startup, but in Kenya, like if you want to buy TV, you know, there's an app that you can save money, and then you book the TV. The app the company will book the TV for you until you save the money. And then if you have enough money, you can start up. So, or like, maybe there might be like a system where like you save as you spend. If you buy 100 shilling of flour, maybe your M-Pesa could arrange 1 shilling saving for you, for example. And then naturally your saving will accumulate, because otherwise, I mean, there's very hard to really start, right? Because realistically, if you go bank without collateral, or even if you have a beautiful business plan, if you don't have a collateral or kind of existing business or existing cash flow, it's really hard, right? So I think that might be, and then probably, what I have seen a lot of entrepreneurs is like start with like a trading, right? Like, so, maybe you inherit little asset and you start trading like motorcycle parts, and then, import, build money. And if you build kind of initial capital through trading, slowly she would go into manufacturing business or agri or manufacturing side of the value chain and slowly grow. That has been like a trend we have been seeing, but it's really $1 million question, Vanessa. I'm still like trying to crack that nut. Yeah, so we can join hand on this journey. Thanks.
Great. And Patrick, I know that in every country, I think of the SMEs Online, USAID has some programs providing technical assistance, but small grants are not always available, and sometimes they are, and sometimes loan guarantees are available through both IFC and USAID, US government facilitated loan guarantees. So what are some of the tools that you would say are entry points for the businesses online are saying, they need anywhere from $50,000 to $300,000 of investment capital, that could mean anything. What do you think?
Thanks. Yeah, I'll provide some thoughts, but you posed quite a tough question. I think first, as a number of people have commented, USAID has supported the Deal Room, which is intended to provide a starting point for many organizations to learn about what investors are looking for and to make contacts that they can follow up later. So we encourage everyone to use that when those opportunities come. We're quite excited to see the growth, I think, because the demand is there, and we really hope that we will see more and more deals facilitated coming out of that process. Another example that I'd share is we have a program called SME Africa. This is a multi-donor partnership with the Swiss Agency for Development Cooperation and IKEA Foundation, and others are supporting us. And it uses a blended finance model. So it provides first loss guarantees to lenders, as well as incentive bonuses for lenders who do lending to first-time borrowers, for small loan sizes, for loans to women-owned or operated businesses, for loans supporting food security crops, for loans that support climate-smart agriculture. Now, the thing to understand is that we are working to strengthen the financial system, and this program is operating in Uganda, Rwanda, Tanzania, and Kenya. So for SMEs, you may not see that aspect of it directly, but many of the financial institutions that you're interacting with may indeed be partnering with the SELI. And we are hoping this will open up, create more opportunities when you approach an institution, that they'll be more interested in what you're interested in getting financing for. The other thing that's a more specific thing on offer under a SELI is technical assistance to SMEs. There's both an online component as well as a coaching component. So if anyone goes to the SME Africa website, there's a contact us page. You can send an email to them saying you're interested in technical assistance on business, financial management, business strengthening, business planning, and they'll get back to you to share with you what kind of opportunities are existing. So I think it is difficult for small businesses to interact directly with USAID at a country level. We generally work through our partners. So I would encourage folks to get to know sort of the universe of programs out there that USAID supports that you may be able to engage with. So yeah, but I think this tool is really great, and we're really excited that we're able to launch this resource tool.
Absolutely. So thank you so much, Patrick and Yosuke. And by the way, Yosuke, I'm waiting for that invitation to go to Japan and use your, the new highly machine learning lending system. So just kind of reserve my seat on the next non-COVID or COVID-free flight. So I think, Lloyd LePage is reminding me that we should reiterate that the tool for the resource bank, which we're launching, is live. It is online now. You can find it by searching AGRF Deal Room. We have had contributions from many of the Deal Room partners, but there are others who are still joining and adding tools. So it's really a living resource bank. And anybody who's been participating have sent numerous links to additional tools which we'll be adding. And as you can see, somebody is sharing with us the many partners who've contributed already. So that's, of course, GIZ, IFC, Prosper Africa, which is the whole of the US government engagement, including DFC and then USAID. Two separate agencies of the US government. And then of course within AGRA, we've worked with all of you, ASELI, SAFIN, IFAD, of course, and so many partners who have been developing tools and sharing tools and resources for SMEs. So I want to recognize the inclusive finance team also within AGRA, who has done so much great work in this area. ACF, as you know, who is a core partner of the Deal Room. GAIN has done a lot with processing food companies, nutritious foods. As you know, CASA, Generation Africa is launching another youth competition this year for competitors who could win awards. So there are awards that can be won. Of course, I think last year there were nearly 10,000 submissions. So you have to have a really great pitch to be one of the winners. But I've seen some of the pitches and really I was scrounging the bottom of my purse to invest in some of these fantastic youth entrepreneurs and new technologies. And as I mentioned when I started, this is the year of the UN Food Systems Summit. And really, what does that mean for SMEs? That I think all of the member countries of the UN are being asked to think about and really dig deep and look at what does it mean to transform food and agriculture globally? What does it mean for global trade? There's no doubt that there's $1 trillion opportunity for SMEs in this sector. And we think that it's the fastest track towards economic transformation for Africa in particular. Given the huge contribution of food and agriculture to the economies across sub-Saharan Africa. And according to Tom Reardon, that's something like 85% from an economic contribution perspective. So there's no doubt that the funding gap is there, which is phenomenal. We're hoping to see financing and investment of upwards of $100 billion across the continent coming into this space, but it's going to be a tough competition. I think Yosuke said it. You have to show value for money. You have to show absolutely top-end products, quality, and so we really encourage all of the partners and SMEs who have joined, who have requested support, who have offered their support to continue to build out this phenomenal network. There are a couple great events coming up next week. February 23rd is one on SME financing that is co-hosted by a number of these partners, including IFAD, World Business Council on Sustainable Development, AGRA One, and a few others. There's an upcoming report launch as well on March 4th. And March 8th is International Women's Day, and I hope you'll all be bringing every possible celebration and grant and award of wonderful women entrepreneurs around the world to celebrate with us. And that'll be available several live webinars on the Value for Her platform as well. So we think that the opportunities are there. There's no end to scrambling, showing yourself and your value as an entrepreneur and increasing your marketing and your network. And again, really huge congratulations and appreciation to all of you for the great work you're doing and the contributions. And this is the official kickoff to our year of deal room events. So Jennifer, I think that wraps up our fantastic session right at the closing mark of 5:30, and Patrick can finish his coffee and Yusuke can close out his day.
Thank you very much, Vanessa, and thank you all panelists. If all is well, you should have received a message in the chat box now with the access to Zoom, but we'll send it to you all by email as well, so you can access the resource bank. Thank you so much and have a nice afternoon.